retail investors can now access Kalshi through an ETF for the first time. The Tema Durable Quality ETF, known as TOL, has taken a stake in Kalshi, the CFTC-regulated prediction market exchange. This move marks a significant shift in how retail capital can engage with private market opportunities that were previously reserved for accredited investors. Kalshi now makes up about 8.4% of the $48 million fund, a notable allocation for a company that has historically been off-limits to most investors. Kalshi is a regulated platform where users trade contracts based on real-world events. These contracts settle when the event occurs, making it a unique financial instrument in the market. Since its launch in 2021, Kalshi has positioned itself as a fully regulated U.S. venue for event-based contracts. The company recently raised $1 billion in a Series F round at a $22 billion valuation, led by Kodu with participation from major names like Sequoia Capital, Andreessen Horowitz, and ARK Invest. Kalshi's financials are impressive. It generates $1.5 billion in annualized revenue and serves 2 million monthly users. Its trading volume has hit $178 billion annually, more than tripling in just 6 months. This rapid growth is a sign of increasing interest in prediction markets, especially as more people seek to hedge or. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Speculate on outcomes in a regulated environment. The inclusion of Kalshi in an ETF is part of a broader trend. More ETFs are starting to include private companies, giving retail investors access to high-growth names that were once only available to institutional or accredited investors. This trend is not limited to Kalshi. Companies like SpaceX and OpenAI are also preparing for public markets, signaling a shift in how private equity is being made accessible to a wider investor base. The significance of this move lies in the potential for broader adoption of prediction markets. If more investors can access Kalshi through ETFs, it could lead to increased liquidity and a more diverse user base. This could, in turn, make the platform more robust and attract even more institutional interest. However, there are risks. As with any ETF that includes a private company, the value of Kalshi's stake is subject to the company's performance, regulatory changes, and market conditions. Another factor to consider is the regulatory environment. Kalshi is CFTC-regulated, which is a major step forward for prediction markets in the U.S. However, the regulatory landscape is still evolving, and changes could impact how these markets operate. The ETF's exposure to Kalshi could be affected if new regulations are introduced that limit or change the way prediction markets function. For investors, the key question is whether this ETF inclusion will lead to sustained interest in prediction markets. If the market continues to grow and more ETFs follow suit, it could signal a broader acceptance of these financial instruments. On the other hand, if the market faces regulatory pushback or a decline in user interest, the ETF's performance could be negatively impacted. The next signal to watch is how the ETF performs in the coming months. Will the inclusion of Kalshi attract more retail investors, or will it struggle to maintain interest? Additionally, tracking Kalshi's financials and user. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Growth will be important indicators of the platform's long-term viability. If Kalshi continues to expand its user base and maintain high trading volumes, it could reinforce the value of the ETF stake. In summary, the inclusion of Kalshi in an ETF is a notable development in the prediction market space. It opens the door for retail investors to participate in a sector that was previously out of reach. However, as with any investment, it comes with risks and uncertainties. Investors should closely monitor Kalshi's performance and the broader regulatory environment to assess the potential impact on the ETF and the prediction market sector as a whole.